Welcome to stockmarketfunding.com. What we are here to show you today is what an MMTP does. And that's called the SMF Market Maker Trader. The P stands for platform, which I don't have on the video. But we have our own proprietary market maker platform. So basically what we're going to talk about is when the markets have good volatility and how to establish certain option strike prices. In this case, on Apple Computer, which here's the equity right here, Apple. Okay. Now, here is a $250 call and also a $250 put. So when you learn in both instruments that stocks break higher intraday, they break lower intraday. The put side runs a certain direction of the market. So does the call side. The call side hits a high of $11.50 and the low was $6.25. Closed at $9.45. So there was nice spreads at times. The range on Apple high was 254.80, 24.3.22, with the put option having a 12.8 high and a 6.60 low, with the previous day's close of 8.25. 24,000 contracts traded on the 250 put and 33,000 of the 250 calls, just so you know. What I would like for people to understand is the power of taking a call and a put at both strike prices, 250, 250, as you can see here. The powerful thing about that combination with a good running equity. So in Apple, what do we mean? The 254 down to 243. It closes at 251 the previous day. The new close going in after the, on Friday morning is going to be 248.48. That's the last print. What's about a 300,000 share order that came in at the close. Now, you can make several dollars trading this at times. So when the stock come down and hit support, you'd have been buying the call wholesale. That low was $6.25 on the call. And if you're an SMF MMTP options market maker, you get these kind of entries using the training that we offer you. Anyway, so let's take a look at the 250 put. 660. That's a 6.2 swing. $6.20 movement with the close at 8.25. What you want to learn what we teach you how to do when you're trading the firm's capital is to get both sides. That's the wholesale entry at the call when it came down to the bottom. When the stock had made that high intraday, that's what gave you the wholesale entry on the 250 put. Period. End of story. And that's trading as to whatever one of these two sides are there. Applying the 254.8 high of the day to a trade, and also appointing another trade. In this case, it was a 250 call, pegging it to that 243.22. And then you make all of that money. And there are times that you'll sell the put, then there are times that you'll sell the call. And you constantly need to be in sync. Right here. So this is for MMTPs. And hopefully that the spreads are huge in both directions of the market based on breakouts or breakdowns in the equities. When you're going to trade a low and a high, you need to learn how to take the options market and get those entries because they pay more and you can make just as much money on a whole lot less.